So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. But nobody wants to be the Bitcoin pizza guy and buy, a couple of books on Amazon for Bitcoin and then realize because the Bitcoin goes up. When does that come? I don't know, but is that going to be a Cambrian moment, just like we've seen with Chat GPT?
Probably.
Yes. It's going to literally change the world. I was in Europe from 2005, and I forecast the financial crisis and then the European sovereign and banking crisis in 2012. And it was quite shocking to me because I knew what was going on. In fact, I'd made money from it. But friends of mine and friends of friends didn't. And they would come up to me saying, why didn't we know? I mean, I tried to warn so many people that I knew what was happening, yet people lost their life savings in the Spanish banking system. The advantage set for baby boomers is they came of 30 years old, roughly, in the 70s. And what they got was real estate at very low valuations versus income. They had equities by 1980, equities at a P of 7. I mean, they got given a gift set and they've ridden it all the way. Now, they've taken a lot of leverage as well because their wages in real terms actually didn't go up as much as they'd hoped. So they took on a ton of leverage, but captured the gains. Their kids are the millennials. They're now the same age as their parents were, and the equity market's trading at a multiple of 3 times what they got. The real estate market is so expensive that these kids can never afford to own real estate. And interest rates are low. Their parents had interest rates at 18%. What they've got is a much lower probability of building the American dream. So then on the other side is their immense risk takers, the YOLO mentality. And so they will take risks that baby boomers think are ridiculous, but they kind of are forced to take the risk because how else are they ever going to catch up? So it's a risk-seeking culture, which has driven entrepreneurship, startups, retail trading, cryptocurrency investments. All of these things are all coming out of this. And I don't think that's a bad thing. They've got lessons to learn. Everyone's got to learn when you invest, how to lose money, what's right, what's wrong. But the buy and hold mentality of something that compounds at 8% a year is just not going to get them to where they need to get to.
Right.
Not now. Okay, this is complicated. Yep. Yes and no. No, because we have the ongoing debasement of the currency system by the central banks. Right. So that means our purchasing power of our income keeps going down versus the price of assets. But if you can buy assets, you'll probably do very well in this environment. But also, I'm a big believer in what I call the exponential age. And the exponential age is this nexus of all of these technologies all hitting network adoption models at the same time. Right. That's cryptocurrency, AI, robotics, longevity sciences, biotech, Internet of Things, self-driving car, all of these things, EV, green energy, all of these things are all hitting at the same time. Mankind has never gone through anything like this. And you can either shake your fist at the sky and say, stop changing, or you can embrace it. And to me, this is a renaissance. This is the roaring 20s is going to be fundamentally a shift than what we knew in the last 50 years. Yep. So I've been involved in this market since 2013 when I first saw Bitcoin. I wrote the first ever macroeconomic strategy paper and valuation for Bitcoin. So I've been all over this space. And the one thing when I wrote that first article is you need a 10-year time horizon. Everything else is done. And if you are worried about these cycles, you are trading it wrong. You're trading and not investing in the adoption of a network. Right. So how does crypto work? Crypto is driven by 2 things. It's really simple. Network adoption, which is Metcalfe's law. So that's the number of active users plus basically the number of connections or applications for those users. That is what drives the long-term trend. The log trend of Bitcoin over time is the best performing asset of all recorded history, and it remains so in every single up business cycle. There is no asset that's ever performed as well. But it is cyclical. The low in 2015 was $200.
Right.
Then it went all the way up to $20,000. And then it corrected down to $2,800. All the lows are massively higher and the highs are massively higher.
Yep.
So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. Your time horizon needs to be long enough for the network adoption model to work. And the best way of doing that is just using a log chart and looking at it within that. And it's a very smooth uptrend.
Right.
And then what you do is you learn to use the down cycle, the liquidity cycle, to add to your investment over time, much like you would have done with Amazon, or you would have done with Google, or you would have done with Microsoft. I don't think Bitcoin will be a payment system except using the Lightning layer for moving dollars around. So it's fine for that. It's fine if you're PayPal and you're in the monetary system because you give people a different product to use. But nobody wants to be the Bitcoin pizza guy and buy, a couple of books on Amazon for Bitcoin and then realize because the Bitcoin goes up too much over
it's too
time.
volatile.
So
yeah.
it's too volatile to do that with. So I know it seems fancy. There is a Bitcoin and ETH economy, and you can get a share of that economy, and that economy can do very well. So, we take payments in ETH or Bitcoin or whatever at RealVision. That's fine. Some people want to do that because they've accumulated a lot of capital in those particular assets. But generally speaking, it's a bit of a red herring, I think, for that. Ethereum itself is becoming the payment system of the internet. It's very interesting because it is a base currency of which we quote things like NFTs in ETH itself. I've never seen that in my life. My big thesis on crypto is I've started two companies. One is Exponential Age Asset Management. That's for investors to invest in digital asset hedge funds and other vehicles to get exposure to the space. So the financialization of the crypto markets, whether it's family offices, high net worth investors, pension funds, sovereign wealth funds, all of that. Science Magic Studios was the other side of that equation, which is I look at a lot of Web3 and it's being built from the grounds up. And they're all experiments. Some will fail, some will work. Great. But when I look at what Web3 does, it enables a bunch of really, really big intangibles on a balance sheet. Culture, brand, community, to become tangibles via tokenization. So the idea of that, we built an amazing team with some incredible advisors to go and talk the talk that needs to happen at boardrooms, not by a bunch of, crypto heads with hoodies, but serious people to go in there and explain how we can unlock massive trapped value for these massive communities and drive forward this whole space. So if you don't have it, you don't have... you can't tokenize. Yeah. But if you do, and we've seen this, the fashion companies coming out of LVMH, they've all started experimenting with this. We can see it happening in the music industry.
Beauty industry too, fashion and beauty. Yep.
Yeah, it's all there. So these things are... This is going to be very big. And even through this, what we call crypto winter, the brands are still interested in this because they're thinking, okay, what this allows me to do, in addition to turning it to a tangible on the balance sheet, it allows me to have customer loyalty in a way that the alignment of incentives makes it a very powerful network effect because your customers, by owning digital assets from your ecosystem, will appreciate in time, or they can accumulate more of them by being good community members, are now passionate behind your brands, much like kids trade Nike sneakers. So they're thinking, okay, this is going to make people more loyal, and we'll have a direct relationship with our community or buyers by doing this. And therefore, we can collapse the costs of using middlemen like Google and Facebook, etc., at the middle too. I've spent a lot of time speaking to these guys. I've done Google Talks to all of the Google team and spoke to everybody from LinkedIn to Amazon to Google to Meta to everybody. They all get it. And there's a great crowd of people in those companies who are really smart, who are pushing for change. But many of the senior leadership also agrees. But they've got the problem of how to disrupt your business model without crashing the plane.
Quarterly earnings calls, yes.
But they do get it. And I think they will transition. Now, Meta have just taken a step back. But again, I know the people there. They're good people. The fight is not over.
No, but
it's just taking time because Meta's under revenue pressure, like everybody is right now.
They went.
AI is going to impact every single industry that's based around knowledge. I cannot stress what a nuclear bomb this is for both productivity, deflationary forces, and the knowledge-based economy. It's going to create huge losers, like the shutting down of coal mines, car plants, and steel mills did. There's going to be a lot of people who are laid off in this cycle that will never get a job again. There's 42% of all code in GitHub now is AI generated. So that's only going to go exponential and accelerate. So we've got an issue now that in the vertical level, AI, as you know, was better than humans at single tasks. But now it's becoming more generalized. So it's becoming better at humans at all tasks. That is the level of deflationary. So what we're doing here is humans have imagination and humans put it into action, whether it's businesses, art, anything. And in the middle of that is lawyers, accountants, and knowledge workers. We collapse that all down. So your imagination can be a text prompt or soon to be a voice prompt, and it will create video, audio, code, anything for anybody. So it's impossible to overstate the importance of AI. It is possible to overstate where we are in the cycle. We've just gone through this ridiculous acceleration phase, and we will probably end up with a bubble, which will probably unwind. But still, like crypto, the adoption of this thing is absolute and total, and it drives what we talked about before, the Roaring Twenties and a renaissance, because it's going to unlock enormous amounts of power from people, businesses, and who knows what else. Well, yeah, because a lot of what is going to come is not been built yet, or if it is, we don't know about it. Now, what is clear is Microsoft, Google, and others will capture a lot of this wave. I mean, the stuff that is hidden in Google X is enormous, from robotics to biosciences to AI. So Microsoft have become ultra aggressive. For a non-aggressive company, they've become probably the most aggressive corporate on earth. So and so there's a lot of value that they will unlock. The other thing is pretty obvious. If you're an investor, the one thing you need for all of this, every single part of the exponential age, is a silicon chip. So the semiconductor companies will do very well because they become the gatekeepers to computational power, which is needed. But in companies themselves, I just choose broad baskets of this stuff because we don't know. And so much of this is still early. You know, we don't even know in the biotech space what's going to have the breakthroughs, but we know when you add AI to the human genome, we will solve cancer and all of these things very quickly. When does that come? I don't know, but is that going to be a Cambrian moment, just like we've seen with Chat GPT?
Probably.
Yes. It's going to literally change the world.